A super good morning to you and a happy Monday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: a case for electric delivery vans, USD, FOMC and last week's PMIs, and the week ahead. With the inauguration in the rear-view mirror, investors are looking ahead to themes they think will drive the market's future. Last week, as usual, technology and communication sectors were top performers, boosted by Netflix's big gain. Even Ford Motors' market-pacing 17% rise on the week was underpinned by tech in the form of high hopes for a legacy automaker's electric vehicle portfolio. Just a note, Tesla reports this week. In Washington, momentum for President Biden's fiscal stimulus plans grabbed headlines, but investors in some economically sensitive sectors didn't seem overly bullish. Even as banks reported solid quarterly results last week, the sector still dropped for the week, perhaps due to indicators of still depressed loan growth. Fresh jobs data didn't paint a very rosy picture of the recovery either. The Nasdaq for the week was up by 4.2%. S&P was up 1.9% despite a 0.3% dip on Friday. The Dow shed about 179 points on Friday and ended the week up just 0.6%. I read something on the electric van business which I thought we could talk about. Until recently, delivery vans occupied an easily ignored niche within the multi-trillion-dollar automotive industry. That is changing, writes Stephen Wilmot. Last week, we heard news that privately held Rivian Automotive raised about $2.65 billion at a $27.6 billion valuation to fund its rollout of EVs, including a delivery vehicle for e-commerce giant Amazon.com, which holds a stake in the startup. Earlier this month, General Motors said it was creating a new company, BrightDrop, to focus on selling EVs to the delivery market. It expects to ship about 500 units to its launch partner FedEx later this year. Electric vans are at the confluence of two big trends. One is the rise of e-commerce at the expense of brick and mortar retail, to which COVID-19 pandemic has given a big boost. The other trend is vehicle electrification. The race to make affordable electric cars is hamstrung by the expense of batteries big enough to satisfy consumers' reasonable desire to head off for a weekend without worrying about running out of juice. By contrast, vans are often driven around cities for predictable distances and be recharged overnight at depots. Fleet owners are much less likely than consumers to buy vehicles with batteries bigger than they need. These were some interesting thoughts written by Stephen Wilmot, which I thought I could kind of talk about, given that we're looking for new trends for the year. Fed officials meet for the first time since Democrats took control of the Senate. Investors will look for Jerome Powell to weigh in on how the fiscal shift affects the outlook and are hungry for clues on tapering. With a marginally more dovish bench, any new thinking on interest rates will also be eyed. No change in policy is expected on Wednesday. Last week, we also had market economics, manufacturing and service sector PMI that came out. According to market economics, manufacturing and service sector activity accelerated in the month of Jan. Existing home sales as well rebounded, which is consistent with the strength we saw earlier last week in housing starts and building permits. The Philadelphia Fed survey nearly tripled at the start of the year, and with stocks hovering near record highs, for the Fed, there's little room for immediate concern in terms of data that's been coming out over the last couple of weeks. In fact, like the ECB and the Bank of Canada, the Federal Reserve will talk about near-term risk but emphasize the possibility of a strong recovery is what is written by an analyst. This could provide some near-term support to the dollar, but prospect of more stimulus and larger fiscal deficit will also act as a drag and limit the gains. Even in Europe, the widespread lockdowns failed to curtail the region's recovery. According to the latest reports, the German economy expanded last month, and while the pace was slower than the prior month, it was stronger than anticipated. Manufacturing activity continued to grow while services slowed modestly. The week ahead, big tech headlines the earnings blitz with Microsoft, Apple, Facebook expected to report faster earnings growth than the market. Chevron may swing back to profit when it kicks off results for oil majors. Economic bellwether Caterpillar also reports, as do Tesla and UBS. Luxury good makers LVMH, Christian Dior, and health heavyweights Eli Lilly and Johnson & Johnson also report during the week. It's going to be a busy week in terms of earnings. Lastly, on the economic data front, we'll be looking out for GDP figures coming out of the Eurozone. On the US, we'll be looking out for durable orders on Wednesday, first print of the fourth quarter GDP on Thursday, and lastly, some personal income and spending data, which is up on Friday. That's the update. It's going to be a busy week ahead with all the earnings that's going to be out. I'll keep you updated. Stay healthy and stay safe, and I'll speak to you tomorrow.